to the Jai Balaji Industries Limited Q4FY24 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Rayo. Good afternoon, everybody, and welcome to Jai Balaji Industries Limited Q4 and FY24 earnings call. We have on the call Mr. Ajay Jajodia, Chairman and Managing Director, Mr. Rajkumar Sharma, Chief Financial Officer, Mr. Vijay Baji, President Finance, and Mr. Ajay Tandya, Company Secretary. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Aditya Jajodia to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. A very good afternoon to everyone. We are very pleased to welcome you all to our Q4 and FY24 earnings call. Our investor presentation and results have already been uploaded on the exchanges, and we hope that you have had the opportunity to review it. As you may be aware, Jai Balaji Industries is an integrated steel products company specializing in value-added products like ductile iron pipes and specialized ferroalloys. Our journey has witnessed a remarkable turnaround driven by the resilience and hard work, leading to record-breaking performances. With Jai Balaji 2.0, our goal is to boost margins by focusing on revenue growth from ductile iron pipes and specialized ferroalloys, and implement cost-cutting strategies, operational efficiencies, and also achieving a net debt within the next 15 months. FY24 has been a very eventful year for us. We've achieved record high financial performance, marking the highest ever in the history of our company. Before discussing the financial and operational performance, I would like to highlight the following. Strategic updates of FY24. Net debt free in the next 15 months. The company is making significant progress in its net debt reduction strategy. In FY24, the net debt decreased to rupees 398 crores from 871 crores, marking a reduction of 54%. It's worth noting that our current net debt to EBITDA ratio stands only at 0.4 as of March 31st, 2024, thus performing better than our guidance of maintaining 0.6 net debt EBITDA. This debt is associated with Tata Capital Limited, and we are optimistic that within the next 15 months, we will achieve our goal of becoming a net debt-free company. To update you all on the capacity expansion and the capex plan of the company, we had earlier announced a capex plan of around 1,000 crores, and out of this, around rupees 497 crores has already been incurred, and the balance 503 crores is expected to be incurred in the next 15 months. All this capex is being done through internal approvals only. I'm extremely delighted to share that we have made a significant improvement towards achieving our capacity expansion plans. Capacity of DI pipes has been expanded 3 lakh tons compared to 2.4 lakh tons last year. Furthermore, 1.4 lakh metric tons, that is the balance of phase 1, and 2.2 lakh metric tons, that is phase 2, is expected to be commissioned in FY25 and FY26 respectively. The capacity of ductile pipes will finally reach 6.6 lakh tons in the immediate future. The ferroalloy capacity is also being increased from 1.3 lakh tons to 1.66 lakh tons. The balance capacity of 0.24 lakh tons is expected to be commissioned by FY25. In the blast furnaces, one of the blast furnaces has already been revamped, and hence the capacity has expanded to 6.3 lakh tons, up from 5 lakh tons of last year. The completion of the second blast furnace is anticipated by the next financial year. Additionally, the capacity of Sinter has been raised by 3 lakh metric tons to 9 lakh metric tons, with the remaining 3 lakh metric tons slated for commissioning in FY25. For more information, please refer to slide 13 of the investor presentation. I would want to highlight here that we are focusing on enhancing capacities for ductile iron pipes and ferroalloys because we believe that there is a very strong demand in these sectors. We expect that the DI pipe industry to go at 13 to 15% CAGR in the near future. The Jal Jeevan Mission and Mission Amrit Sarovar Infrastructure Development Plan, which has been promoted by the government, has led to an increased demand of these pipes, and Jai Balaji is also contributing to the same. Currently, we have around 9 to 10% of the ductile pipe market Currently, we have around 9 to 10% of the DI pipe market share of India, and our aim is to reach 18 to 20% of the market share post our capacity expansion plans. We also manufacture special grade ferroalloys, which is sold at significantly higher premiums to the benchmark ferroalloy prices. We are one of the largest producers of specialized ferroalloys in India and export to more than 40 countries in the world. The company is also focusing on cost reduction measures through enhancing operational efficiencies. This includes owning 3 railway sidings and having captive power facilities. Now, coming to operational performances. For FY24, the production of TMT bars, ferroalloys, and DI pipes showed an increase of 18%, 12%, and 14% to 2.5 lakh, 1.2 lakhs, and 2.4 lakh tons respectively. The sales volume of TMT bars and DI pipes showed an increasing trend of 22% and 14% year over year to 2.5 lakh tons and 2.4 lakh tons respectively. We also saw an increase in exports of special grade ferroalloys to around 40 plus countries, with more than 50% of these being exported to key European, American countries and Japan. Realization of both ferroalloys and DI pipes increased significantly to rupees 1,76,000 tons for ferroalloys and 77,000 rupees per ton for ductile iron pipes, which is an increase of 28% and 12% year over year. The production of ferroalloys and DI pipes increased 19% and 6% year over year to 33 KTPA and 69 KTPA. Sales volume from them was similar to the volumes in Q4/23. Realization of ferroalloys and ductile pipes showed an increasing trend of 23% year over year to 1,88,000 tons and to rupees 83,000 tons per pipes. We are also thrilled to share that Jai Balaji has achieved its highest ever revenue, highest ever EBITDA, and highest ever PBT and PAT for this financial year. Revenue for this year increased by 5% year over year to rupees 6,414 crores. 175 crores, up 71% year over year. EBITDA margin also increased to 15% compared to 9% last year. That also showed a very significant increase of 1,422% to rupees 880 crores compared to only rupees 58 crores on last year. Similarly, PAT margin showed a jump from 1% in FY23-24 to 14% in FY24. Revenue for the quarter increased to rupees 1,846 crores, up 7% year over year. The adjusted EBITDA showed a slight drop of 3% to rupees 257 crores year over year because of certain provisions taken in the books in this quarter only. The PAT increased significantly to rupees 273 crores, up from losses reported in Q4/23. The PAT margin also grew to 15% from -1% in Q4/23. Overall, the performance in FY24 has been outstanding, and we at Jai Balaji are ready for the next financial year. For FY25, we anticipate revenue growth in the region of 25 to 30%, with EBITDA margins of around 17 to 18%, and the net debt to be reduced to a range of around 225 to 250 crores. The capital expenditure is also expected to be in the range of 300 to 250 crores, and we expect ductile iron pipe production to exceed 4 lakh tons. With a focus on increasing the contribution of value-added products for margin expansion, we expect DI pipes to contribute 45 to 50% and ferroalloys to contribute around 35% of our total volumes by FY25-26. In conclusion, I am very confident that Jai Balaji Industries will continue to grow as a resilient organization with a very strong growth trajectory. We can now open the floor for questions, please. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from Jatin Damania from Swan Investments. Please go ahead.
Good afternoon. Thank you, sir, for the opportunity and congrats on a good set of numbers. So firstly, on your two segments, DI and Ferro, where we are expanding capacity and we are confident that the industry is likely to grow in a healthy double-digit growth. But can you throw some light in terms of what was the EBITDA per ton in both these segments in Q4 vis-a-vis Q3, and how did we end at the financial year FY24? Hello.
Can you please repeat the question? You are not audible.
So am I audible now?
Yeah, now you are audible.
Yeah. So I just wanted to understand the EBITDA performance, the EBITDA per ton for the ductile iron and the ferroalloys in Q4 vis-a-vis Q3. And given the strong growth that we are seeing in ductile iron, where our major competitors are also increasing the capacity, how do we see our profitability panning out in the FY25-26 once your capacity comes on stream?
Answering your second question first, the competitors are expanding capacity because the demand projections over here in India for the next 5 to 10 years, it is extremely robust. And there is a acute scarcity of these pipes in the country because of the huge infrastructure growth that has been planned. So keeping this in view, many of the competitors also would be expanding capacities. So naturally, as we had mentioned, that we are having a current market share of around 9 to 10% only right now, and we want to increase it to around 18 to 20%. So keeping this objective in view, we are expanding our capacities. One thing I'd like to add over here is that when we compare ourselves to the cost, so in terms of cost, our facilities is one of the most integrated in the ductile pipes amongst the country. Means we have everything. We have all the facilities located in a single location, and our cost structure is very conducive. So in the cost quartile, we are one of the lowest producers in the cost quartile. And even in the realizations, our realizations are slightly higher than our peers because of, I will say, because of timely deliveries, because of better quality, and because of very personalized service by our marketing teams. In terms of margin, you asked me the percentages. In ductile pipes, we have a margin of around 22%, and in ferroalloys, specialized ferroalloys, we have a margin of around 25%.
And this margin is expected to sustain?
Yeah, this margin absolutely are expected to sustain. Because as I also mentioned, is that other than expanding the capacities, what we are also doing is that we have also undertaken many cost-cutting measures, which are there in slide 13. You will see that. So in this cost-cutting measures, the capacity of the blast furnace has been expanded. The capacity has been expanded, keeping in view that the coke rate will be reduced, the fuel rate will be reduced. Also, center plants have been added. Also, we are adding a substantial capacity of green power to the waste gas of the VFG, etc. So the cost also has been cut down, and with increase in volumes, the overheads also will come down. Marketing expenses will come down. So when we take all these aspects in place, so the margins will be in the region of 18 to 20% for the group as well.
So, sir, when you said about the cost-cutting initiatives that you have taken and you are setting up the railway sliding and the captive power plant, so incremental, how much cost saving that we can see into the overall company? Once about the
incremental, what we're talking about is that on the metals produced entirely, we are looking at a cost saving of approximately 3,000 to 4,000 rupees per ton on the hot metal.
On hot metal. And so one more question on the ductile. When you indicated that the margin is around 24-25% the ductile iron, what was the same in the last quarter, Q3?
Q3 the margins must have been in the region of around 3% to 4%. Around 20-21%.
Okay, so we have seen almost 300 to 400 bips higher in this quarter. And so last question is on your employee cost for FY24. Now, if you look at the overall costing in employee cost has increased by almost 20%. So what was the main reason behind that?
What happened in the first 3 quarters, the projects which were being capitalized, the expenses of the employees were not transferred over there. The entire, once the capitalization were done, approximately 8 crore rupees capitalization was taken out of the employee cost and it was capitalized. Therefore, this quarter the employee cost is lower by 8 crores.
Okay, but this run rate will continue going ahead?
No, it will be in the same region. Annually, if you compare, it will be in the same range.
Sure, sir. Thank you, sir. If I have other questions, I'll come back in the queue. And all the best.
Thank you. Participants who wish to ask questions, please press star and 1. Next question is from Shweta Dikshit from Systematics Group. Please go ahead.
Hello. Thank you, sir, for the opportunity. Question is regarding the EBITDA per ton margins. I mean, could you reiterate the margins for DI pipes and ferroalloys for the quarter in terms of EBITDA on a per ton basis? Also, post-expansion, how are we looking at the margins evolving? Like by FY26-27, what can be the EBITDA per ton expected out of these segments? And I missed your guidance for FY25 and 26 for the segments, volume guidance. Could you please repeat that? Thank you.
Madam, as we just said, is that the margins in the ductile iron pipe would be in the region of around 20 to 25%, 22 to 25%, and in the specialized ferroalloys also 10%. In terms of volume guidance for ductile, we are looking to produce around 4 lakh tons in the forthcoming year. That is FY25, and in FY26 we are looking to produce around 6 lakh tons. And as far as ferroalloys is concerned, we are looking to produce around 1.5 lakh tons in the forthcoming year. With the capacity going up to 1.9 lakh tons, we expect to produce 1.8 lakh tons in the FY26.
And so, what is the outlook on, how the steel prices have, remained range bound, barring some uptick in the prices in this quarter. But if the prices fall further, what's your view on it? Will we still be able to, maintain margins, or what could be the impact of that?
But one thing I like to One thing we will again like to emphasize is that we are making steel products now. We are now no more of a commodity company by and large. As we mentioned earlier in the presentation also, that our sales of specialized products was only 25% 2 years ago, which has increased to 50% this year. Going forward, we are looking to raise it to 85 to 90%. So basically, what we're talking about is that we are making products out of steel, which we are manufacturing in-house. But we are no more a commodity player. So as such, if you are saying that as such the prices of the commodities going up and down will not be impacting the margins, maybe there will be a long-term adjustment in the final prices of the finished products depending upon the cost of production of steel or the sale prices of steel. But then the margins will remain intact more or less.
Okay, thank you, sir.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. The next question is from Siddharth Jain from Yes Securities. Please go ahead.
Hi, good afternoon, sir. Firstly, congratulations. A couple of questions from my side. So you have already mentioned your guidance for FY25 in your presentation, but if you could just give us some more details on the same, that would be helpful. And if you could guide on your ferroalloy production numbers for FY25.
I'll answer you about ferroalloy special grade. This year we have completed with a production of 34,350. The special grade, and the normal grade is 81,000.
Okay.
And what was the first question?
So, and what would be your production number for FY25? Any guidance on that?
In ferroalloys, we'll be increasing capacity by around 30,000 this year. So roughly the same level of capacity utilization. Last year we achieved around 76%. We'll achieve the same level.
All right. So my second question is, can you give a breakup of the breakup of your normal grade ferroalloys and your special grade ferroalloys will also remain the same going forward?
Yeah, we'll try to increase the special grade ferroalloys.
So
that all depends on market and the demand, which is currently being increased. It is showing an increasing trend.
Got it. But any target that you have internally?
Exporters out of India.
Got it.
And that's what Sharma is saying. What is happening is that the special grade of ferroalloys is a very new product for India as a whole. What has happened is that to establish the market, it has taken us more than 4 to 5 years. Currently, we are exporting to 40 countries. And with the passage of every month, every quarter, the confidence of our buyers, it is increasing multifold. So currently in our mix, whatever mix we have given you, is that in this mix, the contribution and the share of specialized ferroalloys will be continuously increasing because the customers have potential to buy more. But many customers are still not buying 100% of the requirement from us because we are relatively new suppliers to them. Because we are the only exporter out of India for these products. So they need to establish some more confidence. It will take a couple of more quarters, 3 quarters more. So it's not a one-day match. It is a long haul. So here also the share of the specialized ferroalloys will be increasing Q on Q.
Got it, sir. And lastly, sir.
One more thing we like to add over here is that the sales of the specialized ferroalloys has increased 80% over last year.
Got it, sir. Noted. And so lastly from my end, so as you've mentioned that there's 1,000 crore capex that you'll have planned for the next 15 months. So anything post that, any other capex plans that you all have on the table or any discussions that you can help us with post the 15 months with 1,000 crore capex?
See, what is happening is that currently the management is very focused to complete this particular capex plan. So as of now, we would not like to give any guidance on further capex till the time these particular projects are completed and the company is able to reap the fruits and the benefits of this particular capex. We will not be in a position to do any further capex. So as of now, there are no further plans. Immediately.
Okay. That was helpful, sir. Wish you all the best. Thank you.
Thank you, sir.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to ask questions. The next question is from Parth Modi from Equirus Securities. Please go ahead.
Hi, sir, and thanks for the opportunity and congratulations on the great set of numbers. I had only one question, that why the other income has gone so up, and can you please give us the breakup of the same?
If you see our last balance sheet, there was a lot of provisions which we had made, and those provisions have been reversed. Those were not required, and the other expenses also has gone up. So certain provisions have been made into other expenses, and these provisions have been clubbed into other income as per accounting.
Okay. Okay.
Thank you. To ask a question, please press star and 1. Next question is from Yogesh from Autumn. Please go ahead.
Kaustubh sir, am I audible?
Yes.
Yeah. Sir, just on to understand the DI pipes basically. So as we know that we are an integrated player in DI pipe. So just wanted to know, and on an EBITDA per ton basis, what would be the difference between a non-integrated and integrated player in the DI pipe segment in terms of EBITDA per ton?
The difference could be as high as around 8 to 10%.
Okay, 8 to 10% between an integrated and a non-integrated.
Absolutely.
And we have about 9 to 10% market share in the DI pipe segment. So how much of the total industry of DI pipes in India would be non-integrated players?
Can you please repeat your question?
So we have a market share of about 9 to 10% in the DI pipe segment in India. So out of the total universe of out of the total industry of DI pipe in India, how much would be contributed by non-integrated players?
See, integrated and non-integrated would also have different levels of integration and non-integration. So what I would like to say is that when what we can mention is about our company is that our facilities are fully integrated and they are all integrated at the same location itself. So that also is a very big advantage. For example, there could be players who are integrated but they have the integration at some other location where there would be a fair disadvantage. So the different players will have different levels of integration. So different types of integration. But if you talk about total integration at a single location, ours would be one of the very few companies.
Okay, so how many, what would be contribution of such players to the overall industry where they are integrated at one location only? So what would be their contribution out of the total industry?
It will be around 50%.
50%. Okay. And sir, one more observation, like if I compare TMT with DI pipes, TMT, we see a fall in realization of about 16% YOY and again 2% on Q1Q basis, while DI pipes, there has been an increase of 23%. So what is the different dynamics playing in both this TMT versus DI pipes?
We will explain. TMT basically, this is exactly what we do. After the question, this is exactly what we've been trying to emphasize. TMT is a segment which is being made by hundreds of players in the country. So it is a pure commodity segment. So the steel prices, they are softened since last year. So that is why the realization has TMT. So the commodity prices have come down, TMT prices, they have also come down. But in the case of DIP, since it is not a pure commodity play, but a niche product play, value-added product play, yet the prices have actually not come down and they've increased. Reverse by that.
Sure, sir. And so what would be the EBITDA per ton in TMT segment? If I can get a range in TMT segment, what would be the EBITDA per ton?
TMT segment, the EBITDA would be ranging in different quarters, ranging between around 7 to 10%.
Okay, 7 to 10%. And sir, lastly on the realization, so DI pipes, the realization increased in 1 year about from 68,000 per ton to about 83,500. And so do we expect sustaining around current levels or it will try to revert to where it started from?
Because see the order book which we have at hand as of now and the demand projection which we are seeing, what we are looking at is that we should be able to maintain this guidance. There may be a correction of 2 to 3% in the prices.
Sure. And so lastly on the election, so from about like 54,000 rupees per ton last year to about 45,000. It is continuously declining. So do we see a steep decline going forward in realization per ton?
Of course, the decline or increase in prices of steel prices, this is a very macro subject. It is a very global subject. So what we are seeing is that globally there are two trends emerging. One is that steel prices, they have softened globally. But in India, what we see on the contrary is that in the last 2 months, in spite of the global prices softening, the prices of steel, they have in fact gone up. So these are factors actually where the global prices as well as the local demand. So whichever will prevail, accordingly the prices will react. So to make a long-term projection of the prices and the demand of steel, this is a very difficult job to do actually.
Sure, sir. Sure, sir. That is very helpful. Yeah.
Tata Steel and SAIL and JSW, they can comment better on this, I think. They are other commodity players.
Sure, sir. That is very helpful. That's all from my side. Thanks.
Thank you. Participants who wish to ask a question, please press star and 1 on your touchtone telephone. Next question is from Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, I wanted to inquire on this other income only. So you are saying that this is like provision reversal. So can you comment how much was it for the provision reversal?
Hello?
Hello.
As far as the provision, the other income provision which was reversed, it was around 110 to 150 was reversed on account of.
Okay. So, sir, in terms of then, if I remove this other income, then there is a margin reduction from 14 to 13%. Is that right, sir? And can you comment on that?
Just 1 minute. The actual reversal was around 180 crores. Hello?
Okay, sir. So, in that case, sir, was there a margin reduction compared to the last quarter of Q3?
Margin reduction was not there. It was in the same region, 13%, 14%.
Got it, sir. And sir, on the tax rate, what should be your assumption for FY25 tax rate?
Tax rate, we have carry forward losses. So probably we will, for the next financial year, we have close to 1,000 crores of carry forward losses which will be used.
So this year, I think our tax rate was close to 9% or so, the one which came in income statement. So that should continue, 9-10% only?
That was deferred taxation which was reversed, which we had in our balance sheet. It is a non-cash item.
Okay. Got it, sir. Thank you and all the best.
Thank you. Ladies and gentlemen, to ask questions, please press star and 1. The next question is from Majid Ahmed from Smart Sync Investment Advisory Services. Please go ahead.
Am I audible?
Yes, sir.
Yes. We got set of numbers, sir. So for my first question is, what is your current order book? And how much of the order book is from the government side? And I guess anything you just split up.
See, the order book currently for ductile iron pipes, it is in the region of around 10 to 12 months of the current capacity. And out of this, around 35% would be government orders.
So the next is you're also looking to diversify into export market.
You're audible, Mr. Ahmed.
Yes, sir, I'm audible now, sir. Now I'm audible, sir? Not clear right now.
Yeah, now you're audible.
Yes, sir. So my next question is, what's your plan, especially going to the export market? And because you're also looking at Africa, and what's the current update on that?
See, the plan for the export market, we have a long-term plan. But currently what is happening is that the demand locally it is very, very robust. and the government is very keen that the infrastructure projects they are completed on time. And since there is a scarcity, so our first responsibility it is towards supplying the pipes in India. We have a very small export market also, which which with the expansions coming on stream by next year. From there we will be moving deeper to the export markets. But immediately in the near future, we are not looking at expanding very aggressively in the export market.
Okay, sir. So my last question, sir, is that so you are also saying that you plan to reduce your power cost maybe through green energy and something. So can you expand on that? Are you plan to install something or any capex is made on that side to reduce it? How are you going to go about that?
Not audible, Mr. Can you please raise your voice?
Yes, sir. Now I'm audible, sir. Sir, yes, sir. So my question is, so you also said you're also going to reduce power cost and making it more cost optimized. So is there any capex made on that front, maybe installing some other maybe renewable energy on that side, like as you're saying about the green energy? Is there any plans on that front?
Mr. Abbas, you cannot hear you properly.
Mr. Ahmed, if you're on a hands-free, request you to use the handset.
Yeah. Yes, sir. Now, yes, sir. So my question is there any plans to reduce the cost on green energy you had said earlier? Any capex on that front to reduce your energy cost?
So with regard to green power, we are putting up another VFG boiler for which 50% of the work has already been completed. And we shall be completing the same in the next 6 months. And this year we will be able to produce more green power out of that.
And what is financial projection on that? Financial implication, like how much cost it can reduce, what's the projection?
So the BFG boiler cost was estimated at around 30 crores only, and out of which around 13.3 crores was spent up in March 2024, and the balance will be spent in next 6 months.
Okay, sir. Well, thank you, sir. All the best.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. Next question is from the line of Guneet Singh from Counter Cyclical PMS. Please go ahead.
Hi, sir. You mentioned that we have moved from a commodity business to more specialized business, and that is what the future outlook also is. So, I mean, our margin used to be about 1 to 5% around 4 or 5 years back, which we are seeing now to be around 14%. So I just would like to understand what kind of steady state margins should the company expect going forward. And I also want to understand, I mean, how would our margins react to changes in steel prices? So for example, in futures, if in FY26 steel prices fall by 50%, so I mean, how should that affect our margins like directionally? I mean, that's what I would like to understand.
We didn't understand your question properly. Can you please repeat this question once again?
So basically, I want to understand the steady state operating margins the company expects in future. In past, we saw that we had about 1 to 5% operating margins about 3 to 5 years back, which are now at about 14%. And you mentioned that the company has moved from more of a commodity business to more specialized products. So, I mean, I would like to understand what kind of margins can be maintained and how would our margins move in future with changes in steel prices. So, for example, say in future if steel prices fall by 50%, I mean, what kind of minimum operating margins can the company still expect to operate in?
Yeah, we'll explain. See, with the guidance given by us, so we've been repeating this continuously, is that we're looking at expanding our margins to 18 to 20% by the time the entire capex plan is completed over the next 15 to 18 months. So this is the guidance for the future. As long as, so this is the first part of your question. Coming to the second part of your question where you're asking what will happen to the margins if the steel prices are to come down. See, even if the prices are to come down, the margins will not come down. In fact, the margins in fact go up with the prices of the steel is to come down, because we are making the products where we are selling at I will say where the prices are linked very much to the prices of of the demand and supply, not so much as to the prices of steel.
All right, sir. So, what kind of minimum steady-state margins can we expect even in an adverse scenario going forward, according to the management?
That is what we will settle so far. Is that are the guidance on conservative basis, it is going to be 18 to 20%.
All right. This is not just for next year, but this is for coming, say, 4 to 5 years.
Yeah, obviously.
All right, sir. That's all from my side. Thank you.
Thank you. Participants who wish to ask questions, please press star and 1. Next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar, sir, and thank you for the opportunity. Firstly, Sharma ji, if you could just explain the impact of the reversal in terms of the other income and also its impact on the other expenses, just to keep it in a comparative number to Q3, what should be the likely number?
Comparative number to
Q3 माने Q-on-Q में अगर हम नंबर्स को कंपेयर करें, अगर हम इसको नेट ऑफ कर दें आपके एक्सेप्शनल इनकम एंड एक्सपेंसेस को, then what should be the net impact?
Net impact जो नॉन कैश इम्पैक्ट है 137 करोड़, जहाँ तक आई डोंट हैव द फिगर इन फ्रंट ऑफ मी, लेकिन इट वाज क्लोज टू 137 करोड़.
Okay. And sir, when I am referring to page number 18 of the investor presentation, we are looking at our EBITDA down 2%, even on a higher revenue Q on Q. So what explains this? Referring to page number 18.
The sale prices of certain products have come down in Q3, Q4. तो उसके कारण थोड़ा सा मार्जिन कम हुआ.
Okay. And sir, Aditya ji, now with the expansion kicking in for the DI pipe, what should be the quarterly run rate for the DI pipe for this financial year FY24-25?
This year, in FY24-25, we will be achieving a production volume of close to 4 lakh tons. And we will be seeing incremental gains quarter to quarter.
ओके सर, जैसे अभी हम 66-67,000 का 69,000 का हम प्रोडक्शन कर रहे हैं, 66-67 का सेल्स कर रहे हैं, तो व्हाट शुड बी द लाइकली नंबर इन टर्म्स ऑफ, इट शुड बी प्रोपोर्शनेट और इन द सेकंड हाफ देयर विल बी अ बम्प अप इन द वॉल्यूम. दैट इज व्हाट माय अंडरस्टैंडिंग, दैट इज व्हाट आई वांट टू अंडरस्टैंड.
Q on Q rise every quarter, starting from quarter 2.
Come again, sir.
You will see a rise in production every quarter, starting from quarter 2.
Quarter 2. So quarter 1 is on similar line in terms of the capacity benefits will kick in from quarter 2. That is what your understanding is.
One, we expect the increase by up to 4 to 5% compared to Q4 of last year. So our first plan has already been commissioned in the month of February. So we will see some gains in quarter 4. Q1 also will see more gains, and our next phase we get commissioned in Q2. So every quarter you will be seeing incremental gains.
Okay. Sharma ji, what should we read into this high trade payable of 858 crore and also this other current liability of 264 crore? Why are these so high numbers when we look at our receivable part? Why are the numbers so unevenly balanced? Correct me there, sir.
I would like to clarify that the trade payable number will also be coming down since the company does not have any bank credit facilities. The company is growing with the support of its creditors as well as the support of its buyers. So these numbers will be high right now, but on Q basis it will be coming down in the next quarter itself.
Okay, and on the other current liabilities part, that has gone down from 400 to 265 crore. So what are the key constituents?
As conveyed by Mr. Salma, that there has been certain provisions which have been made in the earlier years, which got reversed in this quarter. So we are expecting that the other current liabilities figures will be more or less in line with this quarter in the coming quarters.
Right. Aditya ji, you have been alluding to the fact about the ferro alloy segment contributing to around 50% margin रहेगी इसमें. तो सर इसके end users कौन हैं? Who are our main buyers and client concentration कैसा है इस product में?
You need to repeat that question. Actually, it was not audible.
I repeat it, sir. As Mr. Aditya has mentioned that for ferro alloys we are enjoying a margin of 50%. Correct me there. Who are our end users and and is there any client concentration or any concentration in the geographies where we are catering to?
One second, please. Margin was not 50%.
Correct. Yeah, please.
50 नहीं बोला जी.
अच्छा सर, अब मुझे करेक्ट कर दीजिए सर, क्या मार्जिन रहेगा?
हाँ जी, मार्जिन रहेगी करीब 22 से 25% के बीच में.
ओके. एंड सर हु आर द एंड बाय, जैसे आपने कहा कि स्पेशलाइज्ड फेरो अलॉय हम बना रहे हैं जिसका हम हायर प्रीमियम चार्ज करते हैं. सो हु आर द बायर्स एंड इसमें सर अगर हम पीयर कंपैरिजन खोजें ग्लोबली, हु आर बी कंपीटिंग विद?
देखिए, क्वेश्चन के दो पार्ट्स हैं. बायर जो है, बायर जिसमें बड़े वेरिड है दुनिया में. कुछ बड़े बायर्स भी हैं, जैसे इंडिया के अंदर का बात करेंगे तो JSW स्टील है, ArcelorMittal है, ये लोग बड़े बायर्स हैं. वर्ल्ड में जाएंगे तो आज वर्ल्ड में जापान में जो ऑटोमोबाइल मैन्युफैक्चरर्स है, जो एरोस्पेस इंडस्ट्री की जो फाउंड्रीज हैं वो हैं. सेम फॉर यूरोप एंड अमेरिका. सो द लार्ज स्टील प्लेयर्स आर आल्सो देयर एंड अदर देन दैट दे आर वेरी स्मॉल फाउंड्रीज, निश वेरी people who have very niche applications and where the steel is made for the application in the aerospace industry, in the defense, oil drilling, etc. तो इस तरह के यूजर्स भी हैं. तो बायर जो है ये कहा कि बायर की स्प्रेड इट इज वेरी 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 ग्लोबल इन दी डेवलप्ड कंट्रीज ओनली, और इंडिया में इसकी डिमांड धीरे धीरे बढ़ रही है. तो बायर बोलेंगे तो यानी बड़े स्टील प्रोड्यूसर भी सारे के सारे हैं दुनिया के. अब ArcelorMittal का नाम बोलो, चाहे आप
समझिए. So it is all for the value added products only. This ferro alloy is going through the value added steel. So that will fetch
highly value added steel में जाती है.
Okay, sir. When we look at our Chhattisgarh unit, how is this getting integrated with our Bengal units, and how will this serve the purpose of integration as you were explaining to us?
The Chhattisgarh unit, it is in a different, it is in a entirely different geographical region. बंगाल से बहुत दूर है. उससे का बंगाल का कोई यानी कि कोई लिंक भी नहीं है, और उनका वर्टिकल भी अलग है. देखिए, वैल्यूएडेड प्रोडक्ट तो पाइप और फेरो अलॉय सारा बंगाल में बन रहा है. इसके अलावा क्या कि कंपनी के अदर प्रोडक्ट्स भी हैं, जिसमें कि स्पॉन्ज आयरन भी है, बिलेट भी है. तो क्या कि छत्तीसगढ़ के बिलेट बनाती है स्पॉन्ज से.
ओके. तो सर ये जो स्पॉन्ज आयरन बिलेट ये सब की जो स्पेस है, ये पूरा कमोडिटी है और ये मार्जिन डाइल्यूटिव बोला जा सकता है सर इन कंपैरिजन टू द DI पाइप एंड फेरो अलॉय प्रोडक्ट जिस पर हम पूरा थ्रस्ट दे रहे हैं.
एकदम.
तो सर गोइंग अहेड सर, ये जो सेगमेंट्स हैं हमारे, पिग आयरन हुआ, जो पिग आयरन तो सर आपका फिर भी इंटीग्रेशन में जा रहा है, बट अदर देन दैट जो हम एक्सटर्नल सेल्स कर रहे हैं उसकी सर हमारी रूपरेखा आगे क्या रहने वाली? वी विल कंटिन्यू टू सेल इन दिस ज्योग्राफी, और क्या थॉट प्रोसेस है उसके लिए सर?
आपको क्लियर बता रहा हूँ. जो हेलो, हम लोग जो बोल रहे हैं आने वाले 1.5 साल बाद में 80-85% ऑफ द कंपनी सेल्स विल बी वैल्यूएडेड प्रोडक्ट्स. ओके. शर्मा जी बोले, इंग्लिश में बोले, ठीक है. ओके, आई अंडरस्टैंड. ओके, सो
यस सर, प्लीज.
हेलो.
Yes sir, please continue.
If they are going forward, the percentage of value-added products in the total product basket will be around 80-85%. So the 15%, 20% of the non-value-added products will be products like sponge iron, etc., which we are selling from Chhattisgarh also. So we are not closing down those modules, na? Though they are, I will say, EBITDA dilutive in terms of the very highly valued products, but they are not EBITDA negative. They are still EBITDA positive and will be positive. So we will not be diluting those divisions.
Right, sir. Right. And lastly, Sharma ji, on the capital work in progress, this entire 116 will be capitalized by the Q2 with the DI pipes expansion getting commissioned?
It will take three quarters. Something will be capitalized in first quarter, second quarter, and probably next year, first quarter, our entire expansion will be completed. It's the current year, close to 250-300 CapEx will be completed.
Sir, last line I missed completely.
Around 300 crores of CapEx will be done in the current financial year.
Okay. So, okay. That will be the closing capital work in progress for FY25. Hello?
Yes, yes.
Right, sir. And last point on the deferred tax. Yeah, I joined the queue, sir. No issues.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to ask questions. Next question is from Shweta Dikshit from Systematics Group. Please go ahead.
Thank you, sir. My question is answered. No more questions from my side.
Thank you. Participants who wish to ask questions may press star and 1. The next question is from Saket Kapoor from Kapoor Company.
Yes, sir. I was just referring to the deferred tax asset and you mentioning about we are having a carry forward by loss of to the tune of 1,000 crore. So, there will be no tax incidence, cash outflow till the balance get cleared, or we will be paying MAT on the profits that we will be making for during this period.
We are into new regime. MAT is not applicable over there. As far as carry forward losses is concerned, close to 1,000 crores of carry forward losses remain in the company, which will be utilized in the current financial year probably. And as far as deferred tax asset is concerned, around, if I remember it correctly, 250 crores of deferred. So it will get reversed. In the balance sheet, it is around 200 crores is still left, which will be reversed and sold in the PL, charged in the PL this year.
Right. Aditya, you mentioned about a strong growth in the VIP segment, and we are expecting 30 to 15% growth for the coming 2-3 years. So currently, if you could give us some understanding, how is the bid pipeline looking? What is the current installed capacity for the country? And including you and other players, what are the new capacities that will hit the market for FY25 and 26? Any ballpark number you would like to share?
See, the current capacity, operating capacity, is around 35 lakh tons, approximately. So different manufacturers are adding different capacities in different timelines. So we are expecting over the next 2 years, this capacity to grow to approximately around 4.5 lakh tons to around 45 lakh tons.
So from 35 lakh tons to 45 lakh tons will be the expanded capacity in 2 years.
Yes, you have to understand one thing. Adding the pipe capacity, it is not very easy, because the pipe capacity for a integrated player, pipe capacity, it is only the finishing line. But uske piche mein you need blast furnace, you need the sinter, you need the coke oven. It is a fully integrated steel facility where pipe is one of the products. So adding up, adding the capacity, it is not a overnight job.
Right, sir. And if you could give some more color on the bid pipeline, what is the demand outlook in terms of the government bid pipeline with pertaining to the Amrut scheme, the Jal Nal scheme and all? Usme kaisa, what is the traction you are seeing and the bid pipeline look like? So how will this capacity should get absorbed easily or not? That is only my question.
This capacity will be very easily absorbed because there is huge work pending and the still pending. So actually water is a very, very important resource for any nation. So in India, what we are right now talking about in the Jal Jeevan Mission and the Amrut scheme, it is only the first leg of the implementation where the water can be provided to each and every household. Still those schemes to be fully implemented, it is around 2 to 3 years away. After that, there is also incremental demand coming from irrigation. There's incremental demand coming from housing colonies, incremental demand coming from industries. So the demand will be there. So the demand projection, it is very, very positive.
Okay. That will also involve the river linking project also. That is also in the pipeline as you are referring to.
So just the DPR has still not been revealed. That is why it did not be. इसका नाम हम लोग नहीं बोले जान करके.
Okay, but that is also a big demand driver going ahead.
Absolutely, big demand there.
Right. So bid pipeline पे सर कुछ कहेंगे sir? What should be the bid pipeline?
What should be the?
Bid pipeline. If on a nameplate capacity of 3.5 million, what should be the bid pipeline for this year and the coming years should likely be?
No, bid pipeline is very large. The bid pipeline will be at least 50 to 60% more than the demand because the tenders take time to get finalized also. Already इस साल की बात करेंगे तो इस साल already जितनी है capacity इंडिया में already for this particular year the bid pipeline it is more for capacity, but then the tenders don't get finalized overnight also.
Right. And if the time permits, my last concluding remark on the export part. With 6 lakh tons of our capacity coming up, we will look to export DI pipes also going ahead, or we will be totally concentrating to the domestic market?
Our focus for the next 2 years, it is going to be highly focusing on the domestic industry because the demand in India is very large, and we also have a social responsibility to first cater to our own country's demand. Number 1. Number 2, in the export market, we have a very small market share. And in the export market, we will be venturing out maybe after 18 to 24 months once the entire capacity program is complete.
Right, sir. And on the raw material mix of coking coal and iron ore, I missed the price trend for the same. How was the price behaved Q on Q basis for the coking coal and the iron ore, our three raw materials? Yeah.
You are not clear, please.
Sir, I was looking for the raw material basket prices of coking coal and iron ore. How have they fared for the fourth quarter?
See, for the fourth quarter, the raw material prices they always vary with the global trends. So iron ore prices, they had softened. Again, they have gone up very recently. Coking coal prices, they also corrected in Q4. But now again, the trend is slightly up. So iron ore, coking coal, thermal coal, these are raw materials which will keep on fluctuating Q and Q. Fourth quarter, we got a little advantage. Currently, they are a little up. So these things will come. So ये जो चीजें हैं, the price of the raw material is this prices cannot be predicted, but then these will be ups and downs in the market always.
लेकिन कोई खास variation नहीं है. That is what we can conclude.
Yeah.
Okay. Thank you, Aditya ji and Sharma ji, for elaborating and answering to our questions, and all the best to the team. धन्यवाद and namaskar, sir.
Thank you very much.